Hi everyone, this is Daniel from Parisian Capital. I haven't made a video for a long time, just because I've been holding some of our core positions, for example, the Iridium, and also the market has been really volatile for the last couple months, especially during the December month and between October and December last year. It was pretty volatile, and we've just been holding our core positions. We've added a little bit on the Iridium position back in, I remember it was back in January, and we're also looking pretty closely at some other companies that we also holding. One of our um, slightly smaller holding would be the JD.com, and um, also SE is a Southeast Asian um, e-commerce giant, and they are also the sole, I believe, Tencent, which is the um, one of the biggest, probably the biggest social media company in China, which is a kind of a Chinese version of Facebook. They're also a huge investor of the company called SEA, right? And this one has been doing pretty well for us. Sorry, not this one. SEC Limited. So this one has actually exploded. We unfortunately we didn't really accumulate a lot of positions after before it was exploded. We added a bunch of stuff here. We weren't too sure about this company because this is a almost a $6 billion market cap company, right? It's fairly big compared to my previous analysis on Iridium last year. That one was only a less than $1 billion company, so we're really looking for something that's under $1 billion. That's easier for the much larger money to really come in and accumulate, and then they can really make a huge move in the price itself, right? So today, I'd really like to talk about this company that we've been really um, taking a. We've been following this company for actually a long time. It's been almost a year and a half. We've been following this company, which is called Qiwi. Um, so when maybe some of you guys have heard of this company. If I really mention which nation this company is based in, a lot of people would just simply turn on my video almost right away. So this is a Russian company. This is a Russian company. I know when I talk to many of my my investors, they they really don't want to have anything to do with Russia. My dance teacher actually, where I was doing choreography lessons, which my teacher's from Russia. When I talked to him about this company, he's like, I don't want to invest in, Russia. Um, so even Russians don't want to invest in Russia. That means if there is, I'm pretty sure. So here's my belief. My belief is that in every single nation, even some of the the worst places, there's always um, some value in something, right? It cannot be all garbage. I know Russia has been growing pretty steadily despite the sanction in the last couple of years, and um, it's still a relatively stable economy despite what the media says. And also, I know um, Russia, they are introducing some sort of legislation for cryptocurrencies. So this company is a bit related to cryptocurrency, but it's not. It's actually not totally related. I mean, that's just like icing on the cake. So I'd like to talk about this company today, which is called Qiwi, which is a think about the Russian version of Square and or PayPal. This is just a fintech company. So if we look at the valuation for Square or PayPal from the States, you'll see that the valuation for these companies are actually pretty rich, right? So if we take a look at the PayPal, it's gone up a lot in the last couple of years. If we look at Square, it's gone a lot. You might say that these are U.S. companies. They have global presence. They benefit from the U.S. economy, which is much larger than the Russian economy. Okay, then I can talk about this another fintech company called this is a Brazilian one, PAGS. So even for this company, the valuation is quite rich. The valuation is about $8 billion or $10 billion, and the revenue that this company has, the company I just talked about, the PayPal, the Square, the Brazilian company, or any of the fintech company in the world, their valuation compared to Qiwi is way higher than Qiwi. When I'm looking at the chart, I noticed that when this thing got listed on Nasdaq, it actually went crazy for the first year. It went from $15 to $58. That means there are the smart money or the large buyer is capable of lifting the stock rapidly through a huge price increase in a very short period of time. So this stock is capable of having really high volatility. Especially, it has a lot of potential having a huge volatility to the upside. And we can see that this is something I really like is that this stock has been going down for many, many years. It's been going down since 2014 January until I think it bottomed around 2016 May, which is 2.5 years. And for the last 2016 May to 2019, today is March 18th, it's been three years. I'm in this declining pattern, this decline stage. Stage 4 decline would be 1,902 days, right? So 5 years. It's been 5 years. So essentially, this stock has been forgotten. If you go to any of the, I don't know, any of the website, try to find news regarding to this stock. So let's go to stock tweets. There's really no activities related to this ticker. I know there are probably a lot of activities between this and this, between this period, because it was kind of crazy. But there's no activity during this period. We've been following this ticker since 2016 May, and so far, literally like whoever paying attention to this one is doing something else. So right now we're looking at this interesting pattern here. Actually, historically speaking, when a particular stock went up and down and do this, and it kind of this is a really typical wash and rinse pattern that you can find in many equities historical chart pattern. And this tells me that it's kind of in a stage 4 bottoming process. And I feel, I mean, not I feel, I mean, if you take a look at the 100 days moving average, we just got above the 100 days long-term moving average. We have added several we have added to our portfolio this from this point on. Actually, we've been adding here and about this area as well. Recently has jumped up again. So we are expecting this to continue going up in this wave pattern, and most likely that we're gonna be seeing something like this. Then it's going to probably in the next earning or something. I think our next earning is gonna be in March, end of March. So we're gonna have a earning event, and then it might just consolidate here a little bit. I'm thinking maybe there's gonna be another catalyst or some news comes out. This thing could gap up and start just moving like crazy for the rest of the year. So our price target is actually for this one is going to be another 100% profit target. Another at least goes to another 100% or 200% within this year or early next year. So we're going to be that's something we're looking for here for this particular stock. If we look at the 30 years financial data, you can see that the revenue per share has bottomed out around 2016 and has been steadily climbing quarter after quarter. And also, when we're looking at, again, this is a Russian company, we have to worry about the currency risk here. If you look at the ruble and USD, sorry, USD IUB, the currency has gone kind of stable, and you can see that it's the ruble is actually appreciating against USD recently. We think that it could be stabilizing, which is very good for this stock because most of the revenue is coming from Russia. So the higher the Russian currency, the better value for this stock. Again, so looking at the financial data, looking at the valuation, we did the DCF analysis. Right now, it's actually about, according to our model, it's about 30% discount, 30 to 40% discount. In some more, in a very conservative growth estimate. So if we really want to crank up the growth trajectory, for example, if I'm really taking account the most recent growth trajectory, which is around, revenue growth around 30% year over year. If we're really taking on that, this stock is undervalued by at least almost 80%. And if we compare this particular company against Square or PayPal, if we apply the similar valuation, that similar earning multiple or revenue multiple that these companies are getting, then this stock should be about an $80 stock or $50 stock. I actually don't remember the exact number, but so I believe that we are close to a explosion point in the next couple months. So whether you are, but I highly recommend through a buy and hold strategy. So by the dip, whenever there's a dip, you should add to the position. I would not recommend a option strategy, however, because when I look at the option book for this particular equity, it's really thin. It's not very liquid, and also you can see that this particular symbol moves really slowly, right? This period is almost a year. It went nowhere. So if you bought any options anywhere, you could just completely, the option could become worthless. So although our expectations to, the move, we believe the huge move is coming up very soon due to the very favorable financials that this company is generating since 2016. However, we don't know when the smart money is going to really crank up their buying and to really start pushing the price of this particular stock. Okay, so here is my my analysis for Qiwi, this fantastic Russian fintech company, and I hope if this does go up, and I hope you guys can benefit from it. Thank you.